Welcome my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice. Bitcoin closed yesterday with a strong green daily candle, holding above both the 21-day EMA and the 200-week SMA, which is encouraging sign for the bulls. Even better, today's session has already opened higher, showing that buyers are still stepping in. One of the biggest stories is the news that Michael Saylor has reportedly sold some Bitcoin and price is still trading within the range of the day that news broke. But it looks like it's trying to take out that high. Historically, the last time we saw a similar situation, it was followed by a significant sell-off. If Bitcoin were to trade below the average cost basis of strategist holdings, there has always been the possibility that shareholders' pressure could force additional selling. Looking at the US dollar index, the dollar closed with a red candle yesterday, but it continues to hold both its support level and the 21-day EMA. As long as the dollar remains above these levels, it could regain strength, which would generally create headwinds for Bitcoin given their typical inverse relationship. If the dollar were to lose this support, that would become a more supported development for Bitcoin. DVOL printed a red candle yesterday, indicating declining implied volatility. Lower volatility often creates a healthier environment for sustained price appreciation, so that's another factor currently working in Bitcoin's favor. ETF flows, however, continue to tell a different story. Yesterday marked another day of net outflows, showing that institutional demand remains relatively weak. While ETF flows don't dictate short-term price action on their own, they're still an important indicator to monitor, especially during key resistance tests. Speaking of resistance, the main battleground remains between $63,000 and $66,000, with $65,000 standing out as the final major resistance level for the bears. This area is particularly significant because several technical resistance levels are converging here, including the 50-day EMA, the 50-month EMA, and the major weekly resistance level. Looking at the monthly liquidation heatmap, liquidity continues to build on both sides of the market. To the upside, liquidity is stacked all the way towards $67,000, while on the downside there are significant liquidity pools around $60,000 and again near $57,000. As we know, Bitcoin is often drawn toward areas with large concentration of liquidity, so these are key levels to keep on your radar over the coming weeks. Finally, it's worth remembering the seasonal trend. Historically, July has often been one of Bitcoin's stronger months, even during years where the broader market struggled. That means a short-term rally over the coming weeks would not necessarily invalidate the larger market cycle. It could simply be the typical seasonal strength that Bitcoin has shown time and time again. And that's why I posted on X. This is the Bitcoin cycle repeat chart, as I still believe that Bitcoin moves in cycles. If we would repeat the last cycle, this is what we would get. Real bottoms form when the majority of active supply is underwater. We're not there yet. Aviv Nopal hasn't hit the accumulation zone, still above deep value. So what do you think? Has Bitcoin truly bottomed? Or is the real capitulation still ahead? Let me know in the comments. Have a nice day. Bye.